Today, for the Bitcoin price, with no one else but the one and only Michael Saylor. Finally, after 12 months talking on our channel, we have him back and we have juicy and interesting things to discuss. Not only in regards to price targets, well, but also in regards to institutions, some potential insider information, why he is buying Bitcoin at every single dip, and much more. If you thought the last interview we made, which is the second most watched Michael Saylor video on the whole internet, was worth watching, I can tell you the information in this video are definitely worth watching. So watch this video until the very end. Smash up the like button. I leave Michael Saylor's Twitter profile down below. If you're not following that one, what are you doing with your life? And with that being said, I wanted to come to the by far most important question of today. Michael Saylor, how are you doing today, my man?
Awesome. Happy to be here. Thanks for having me.
I'm happy to have you as well. I get nostalgic feelings. We talked like 12 months ago, before Elon Musk officially announced that he bought Bitcoin. I still think, and probably you're not going to deny or approve, I still think you did a very big part of actually getting him and Tesla into Bitcoin. You had a very big part, in my opinion, from the run of Bitcoin from 30,000 to 60,000 of many institutions getting in. We are very grateful for that, as we need this, of course, for mainstream adoption and for also Bitcoin being recognized as legitimate store of value. So now, 12 months later, let's reevaluate a little bit. And I wanted to ask you, well, back in the days, it was Elon Musk. I'm pretty sure it was you getting him into it. Who knows? Did you talk ever since then to other people of interest, maybe other important people who are now likely to get into Bitcoin, who at least got interested in it?
Yeah, it's been a pretty communicative year. I mean, I spend a lot of time talking with people that are interested in Bitcoin. I think it's been a great 12 months. There's been an extraordinary increase in interest amongst family offices. A lot of a lot of high net worth individuals that didn't really know much about Bitcoin. It all of a sudden came onto their radar in 2021. A lot of private companies. I know a lot of, a lot of friends of mine, and I make a lot of new friends now that run private companies, and they're all wondering what should they do with their treasury. I've been reached out to by a lot of public companies and public investors as well. So I spent a lot of time talking with executives of large enterprises from all over the world. I mean, now you can Zoom anywhere. So anybody in the world interested in Bitcoin that wants to understand how to put it on a balance sheet, oftentimes will want to talk with me. I have a lot of engagement with public investors, and sometimes it's just meetings to explain what we're doing and why we do it. But if you go on our website, you see we actually did a MicroStrategy Investors Day, and half of the discussion is our Bitcoin strategy. We have lots and lots of people that show up when we're doing that, but also we post all those things online, and they get many views. So I think our job is never done. If you think about it, Bitcoin really was not on anybody's radar. It was on 1% of the market's radar before March of 2020. And then by the end of 2020, it was like 1.5 or 2% of people's radar. In 2021, it started moving on the radar of a lot more companies. And you may have noticed Goldman Sachs all of a sudden is starting to coin, Morgan to cover Bitcoin. Citigroup is starting to cover Bitcoin. A lot more information coming from the bulge bracket firms, and partly that's because there are so many companies coming public that have a Bitcoin interest. And I think MicroStrategy was a on-ramp for a lot of public investors to get into Bitcoin, right? Our market cap was a bit more than $1 billion before we got into Bitcoin, and none of our investors had any Bitcoin exposure. And our enterprise value increased to $8 to $10 billion. And of course, that's $10 billion worth of institutional investors holding Bitcoin-backed bonds, converts, our junk bonds, our senior secured debt is backed by Bitcoin. Our converts are backed by Bitcoin. We did 1.7 billion worth of converts, all backed by Bitcoin in a way, or let's say backed by Bitcoin, but they're Bitcoin exposed. People invested in them for the Bitcoin upside, and then all the common equity. And so it's definitely a reason to talk to a lot of people, but MicroStrategy is just one company. And I think by the end of the first quarter of 2022, we'll probably have 2 Bitcoin miners that are public. And so if you're looking at maybe one of the most important trends of the past year and a half, it's the parade of Bitcoin miners that are coming public, and the transition of small Bitcoin miners that were trading on secondary stock markets, like they were trading on the German exchanges or the Scandinavian exchanges or the London exchange, and the Canadian exchange, and they've all been transitioning to the New York Stock Exchange and the NASDAQ. And so as you see that trend of companies coming public, companies switching their registration to the North American capital markets and the US capital markets, that causes all of the large banks to wake up and all the large investors to wake up. And that, of course, brings them coverage. And when everybody's doing that, the question is, how should I think about this as a public company? And so MicroStrategy, coming out early and making such a big commitment is, has been able to get a platform to communicate. And I think that's been instrumental.
Yeah. Yeah, I absolutely agree. And I find it crazy, but in a good way crazy, the Steve Jobs crazy, that like MicroStrategy at every single dip, sometimes like some purchases were even much higher than now, but every single time the price dips, MicroStrategy comes out with an announcement, sometimes a little bit delayed, that you bought even more. I think you have more than 100% in, because you are also buying on depth now, of course, which for the specific purpose of Bitcoin, it really makes sense. So now my question is that almost on a weekly or bi-weekly basis, these announcements are coming out. Is this ever going to stop? Or are you going to accumulate Bitcoin until you are owning them all? Of course, that's not possible, but please let me know if there's any end in sight, or do you want a dollar cost average forever, as long as you are getting loans, as long as you are able to buy more and more?
Our initial purchase of Bitcoin, I would characterize as defensive when we bought the first 250 million. And then we did a Dutch auction to see what our investors would think. And the investors were pretty supportive, and we ended up with another $175 million, and that became kind of opportunistic. We thought, well, the investors are supportive, so we'll do it. Then we got toward the end of the year, and our stock price started moving up, and it moved to like a 10-year high. And we had the ability to go back and raise convertible debt, and we started trying to raise $400 million, but we upsized the deal to $650 million, and it was extraordinarily successful. We raised $650 million at a 75 basis point rate, and Bitcoin was like trading toward an all-time high there, like 18 or 19,000 a coin, and people thought we were crazy, but our view was this is the future. So we bought that Bitcoin, and that also, I think, opportunistic. I would characterize that. When we got into February, we really reviewed our business strategy, and we flipped from defensive to opportunistic, and we realized this is now strategic, right? This is the strategy of the business. We're going to acquire digital property, and Bitcoin is the world's greatest digital property, like a property development company. Like if I moved to Dubai and I decided just to buy all the land in Dubai, or all the land I could buy, or buy up all of Manhattan. So if you look at our 10K, right, our annual report, an annual report of publicly traded company, it has to state what is its business strategy, and then what are the risks associated with it. That's part of the public company filing. So what you'll see is in 2021, the big change for us is our business strategy went from a single strategy to create and sell enterprise business intelligence software worldwide to two strategies, right? And one was the enterprise software strategy, and the second was a Bitcoin strategy. And the strategy is very clearly enumerated. Our strategy is to acquire and to hold Bitcoin. So the short answer to your question is we're going to keep buying Bitcoin forever. And the reason why is because the amount of Bitcoin coming on the market is exponentially falling, and we know it's asymptotically capped at 21 million. We also know that the stock to flow rate is rising asymptotically, or it's rising rapidly to infinity, and it's about to go negative, right? It used to be the Bitcoin miners, when they were private, they were cash businesses. And so if you're a private operator operating maybe in China, you're mining Bitcoin and you're selling Bitcoin to get hard cash. But then when the markets developed, the public markets for Bitcoin and the public markets for Bitcoin mining stocks developed, these businesses became well capitalized. So if you look at what's happened in the past 12 months, most of the Bitcoin mining has shifted from China to North America, and these companies become public. So Marathon and Riot and Hut 8 and and Argo, and soon Core Scientific will be public via SPAC. Just this last week, Bitfarms announced they bought 1,000 Bitcoin with cash. That's $42 million or so worth of Bitcoin. Okay, it's a company buying Bitcoin as fast as it is mining Bitcoin. Marathon bought a bunch of Bitcoin earlier in 2021, and one thing that happened is all these publicly traded Bitcoin miners stopped selling their Bitcoin. Right now, because if you're a Bitcoin miner, you're being valued based upon your ability to generate Bitcoin, right? So if you're a public company investor, if you were buying a Bitcoin miner and you thought Bitcoin was going to go to zero, would you buy the miner?
No.
No. So all the public investors are long Bitcoin. They expect Bitcoin to go up, right? So what would you rather have? A Bitcoin miner that mines a lot of Bitcoin or a little Bitcoin? Well, a lot. Would you rather have a Bitcoin miner that mines the Bitcoin and sells it, or the Bitcoin miner that mines the Bitcoin and keeps it? You want them to keep it. And
for Bitcoin, I would keep it, but it's always important for me to decide whether to mine or not. What's the cost of producing, and how much Bitcoin would I get in T0, putting the money instead of in mining equipment into Bitcoin directly, as it's long-term rising in value. Energy cost might be increasing. So it's always a rough calculation, right?
Yeah. So imagine Bitcoin miners start to actually raise billions and billions of dollars in capital as credit and debt offerings and equity. Now they can either buy the Bitcoin mining rigs or they can buy the Bitcoin. Well, one thing that they can't really spend all that money on Bitcoin mining rigs. There's a limit to how much capacity they can buy and when they can bring it online. I think we're getting sold out. It seems to me like those mining rigs, the lead times are becoming a year or a year and a half. So as they get better capitalized, that excess capital converts into not selling Bitcoin. And then when they get even better capitalized, excess capital becomes, I'm not sell Bitcoin, but I'm also going to accumulate Bitcoin. Okay, so now the stock to flow starts to switch from a stock to flow of 50 to a stock to flow of 100 to a stock to flow of 200. And then at some point, the stock to flow goes to infinity. And then the stock to flow goes, because the miners don't necessarily dump any Bitcoin on the market to sell. They're actually mining it to keep as an investment. And then they're buying excess Bitcoin because it's accretive to to their balance sheet. It's accretive to their stock. So this is a pretty powerful trend. In fact, I think we saw Riot raise $600 million of equity in the fourth quarter. And we saw Marathon do a $650 million convertible debt deal in the fourth quarter. And we know that other companies, that one in particular, I think, raised another 400 million. So 3 companies raised $1.5 billion, just 3 companies. If you look across the 24 publicly traded ones, it's a lot more. But if you look across the 24 publicly traded ones and the big 25 private ones, you can see that billions and billions of dollars of capital via private equity, debt, public equity, and credit lines are flowing to the miners. And all the miners have naturally long investors that are long Bitcoin. So what you have there is this very unique situation, maybe in the history of the world. We've never had a circumstance where the producers of the product were producing a scarcity. Like gold miners are producing a commodity. Silver is a commodity. Copper is a commodity. Glass and steel are commodities, right? There's an unlimited amount. So the natural reaction or the natural rational behavior of all those companies is to produce as much as possible and sell it as fast as they can. But with Bitcoin, because we're running out of Bitcoin, the rational behavior is to produce as much as possible, but to sell as little as you can. And if you sell it fast, your equity is worth less. And if you produce it and hold it, your equity is worth more. So if your equity is worth more, you can raise more capital. And if you raise more capital, you can buy more rather than sell more. And so what happens is the well-capitalized miners also, they are also the least likely to sell. So if you're not well-capitalized, what are you going to do? You either have to go public or you're going to sell your company to a public miner. And did you notice that Marathon just bought a huge amount of mining rigs from Bitmain, like $1 billion worth or something? A lot. Check out the press release. It's like a massive amount. I think they've announced that they're headed toward 23 exahash by the middle of 2023. Okay, so that means that all of the
selling? Well, they are from China, right?
Because Marathon's the high bidder. Like if someone offered you $1 billion order, right, and no one else did, would you take the money?
Depends on what I could do.
See, who's got more money? Who's got the money to outbid Marathon in the Bitcoin mining business? Nobody. You see?
Yeah.
So what happens is the public companies get the largest market cap, and then they buy up all the mining rigs. Now, if you're a miner in Asia, you can't buy any mining rigs. So what happens to the hash power? The hash power moves to North America. So if the hash power is moving to North America, where do the investors and Bitcoin miners move to? North America. So who wins? North American miners. What do? Well, they buy mining rigs and block everybody else out of the market. Okay, fine. Then what do? They buy up all the miners in the rest of the world. Then what happens? Well, the public investors bid up stock. They're going to have all the Bitcoin rewards, right? Then what happens? They raise more money. Then what happens? They can't buy up any more mining rigs. So what they do is they stop selling Bitcoin. They've already seen that, right? If you look at the top 20 Bitcoin miners, you see that they're hodling their Bitcoin. So then what happens after they stop selling their Bitcoin? Price of Bitcoin starts to go up. That happens. Well, then you start buying the Bitcoin. So, I mean, imagine if a gold miner said, "Oh yeah, we just raised $1 billion and we bought gold with it." Well, they're not going to do that because gold's not scarce. You see, gold's
Yeah.
not scarce for two reasons. It's not scarce at the metallic level, but it's also not scarce at the derivative level, right? You can just print too many gold derivatives. So Bitcoin's a much better idea. And I think the thing that's underestimated, it's underappreciated, and there is like a 1 to 3 year delay, is the impact of all the publicly traded companies that are mining Bitcoin, right? If you look at them, right, I think Bitcoin mining revenue is like at the current price, it'd be like 14 billion a year, maybe.
Mhm.
Okay, so what happens if the publicly traded Bitcoin miners are able to raise $14 billion in capital in the year 2022?
The,
You
the
see
the
what
price
happened?
increases significantly. It's not just like because $1 billion in buy volume, of course, increases the market cap by way more than a billion. So 14 billion would be significant for the price. Very, very significant.
You have two dynamics, right? I mean, first of all, of the 14 billion, the gross margin on that is 75%.
Yeah.
So if they mine 14 billion, they've got a $10 billion profit. Well, what are you going to do with that? You're going to invest that in Bitcoin
Yeah.
because you're long Bitcoin. So you've got $10 billion that might flow as profit that gets reinvested. And then if you raise another 10 billion, right, you've got what can you invest that in? Well, you know, you're going to lock up the mining rigs and then you're going to buy Bitcoin. So we're talking about a very material impact on the supply of Bitcoin flowing in the market. And I think the logical conclusion is sometime in the next 12 to 36 months, the miners are a net buyer of Bitcoin. They're not really a sell Bitcoin. And it's a positive feedback loop, right?
Yeah.
Because the miner that accumulates the most Bitcoin generates the highest market cap and has the most power to accumulate more Bitcoin. So the game theory says that if you're the miner number 2, don't you want to copy that? And miner number 3. And when you get to miner number 27, if you can't copy that, you're going to sell out to miner number 2, you see. And so the industry will consolidate, come public, go west, strengthen. And the capital flows that are interesting here are not just the trading in the spot market of Bitcoin or trading in the derivatives of Bitcoin. I mean, it used to be it was spot Bitcoin, then it was derivatives of Bitcoin. Now it's regulated derivatives exchange like the CME. But check out the side markets. Check out the market in trading in Marathon and Riot and Beto and MSTR. And if you look at the amounts, like we can do it even right now, like just for kicks. If I go here to my screen, like even in the first
You
hour.
wanna share the screen?
No, I'll just tell you. I'll just tell you.
Okay.
In the first hour, it's like $90 million of Marathon stock has been traded in 1 hour. Um, 70 million dollars. No, it's about $35 million of Riot stock has been traded in 1 hour. The Beto ETF has about $50 million traded in 1 hour. MicroStrategy has about $50 million traded in 1 hour. So you see where I'm getting at, that there are very large markets that are derivatives of Bitcoin that are getting massive trading, and that's capital market support for that. And ultimately, those markets, they're supporting Bitcoin itself, you see. When you get to the point when you have 30, 40, 50 companies that are trading with multi-billion dollar market caps, then all of those are maturing and stabilizing the industry. And this is a dynamic that really is a big advantage to Bitcoin versus any other commodities business or any other store of value. And it's a differentiator of Bitcoin versus other cryptos, right? Because in order to take a company public, you kind of need a proof of work mining network. You need a company in Texas that does stuff, right? You can't very easily take public a staking network because stakes are probably securities, and it's a much more complicated thing. It starts to look like a mutual fund, whereas miners are operating companies. And operating companies can get capitalized in the private market and the public market. And so you think of them as the bridge between traditional mainstream capital and crypto economy. And it's important to stabilize Bitcoin with all these Bitcoin derivatives, but it's also important to stabilize it politically, because, you know, the governor of Texas now has a bunch of companies in Texas that are paying taxes in Texas, that are employing people in Texas, that are buying energy in Texas, that are good corporate citizens in Texas. That's an industry. Just like it makes an industry in El Salvador, an industry in Canada, an industry in New York. And the creation of these industries, they recruit support. And people are much, you know how they support the soccer team from their hometown because it's in their home stadium. They play in my home stadium. I'm very loyal. People are loyal to the home team. And so Bitcoin miners, they're kind of the home team, and they will recruit the mayors, the governors. They recruit the investment banks, right? I mean, when Marathon sells a $650 million convertible deal, the investment bank sold it and got paid to do that, and then there are investors on the other side that bought it. So what we're doing is we're sharing the good fortune, spreading the wealth around, and it's decentralizing the network more, right? And all of those are good things, and every single company is working very aggressively all the time to decentralize the network, right? I want to find new political jurisdictions. I want to recruit energy companies, nuclear power companies, the ERCOT grid, you know, geothermal companies. I want to recruit industries. I want to recruit new institutional investors. I want to recruit new investment bankers. And of course, when you've done all that, then the media wants to cover it, right? Because CNBC now has 20 or 30 publicly traded tickers. And you've heard that phrase, interested. I'm not interested in this thing. The word interest, classically understood, means I have a financial interest in this story. So when the Wall Street Journal writes a story about a ticker, you know, RIOT or MARA, if the ticker is there, that means that there's a built-in audience that will want to read that story. They are interested. They don't write stories about private companies very often, because if I write a story about a private company, who's got an interest in it? Nobody. Can you buy it? No. Can you sell it? No. Can you trade trade the options on it? No. If I can't bet on it, I'm not so caring about it, right? I mean,
I think that's why I have a YouTube channel about Bitcoin.
Yeah, because it's changing all the time, right? Like, for example, even if you hate it, like write a story about saying like such and such, you know, such and such Bitcoin miner is really poorly run and stupid. Well, I can go and short the stock. I can bet against it, right? This quarter, oh, I read that Tom Brady's arm is sore this week. I can bet on the game. And so it becomes newsworthy. And if you want to capture the interest of Bloomberg and CNBC, right, and Wall Street Journal, right? And every other financial writer. You have to give them something interesting, and that means public tickers, right? That's why, those things matter, because we still have a world where, 99% of the money is in the traditional economy. And that means 99% of the political support, 99% of the media interest, 99% of the financial and the banking systems. And so the crossover is the ETFs. The crossover is companies like MicroStrategy. The crossover is the Bitcoin miners, right? That crossover creates a bridge between the old and the new, and it provides a smooth, graceful transition. I mean, if I know graceful is not a word we use when we describe crypto very often, right? It's nothing graceful about it sometimes, but it would be much worse,
Yeah.
right? And even harder if you didn't have those public companies that are intermingling their balance sheets with Bitcoin and by inference the crypto economy.
Yeah, I definitely agree. And I see also MicroStrategy being something like a link between the traditional world and Bitcoin. People have to understand Bitcoin is the only asset I can think of, like I would even leave out time as an asset if you wanted to, which is absolutely scarce, right? I think you mentioned at one time. Well, let's say there's $1 billion investment going into gold mining, then of course more gold is mined. Maybe it's going to be made more efficiently. Maybe in the future we can mine it on asteroids. You don't really know what's the maximum supply. If you put more money into gold mining, more gold is being mined effectively, right? But if you put more money into Bitcoin mining, the network gets more secure. And now think about, we have a few, you mentioned a few names, a few very, very big companies already involved in Bitcoin. Let it be mining, let it be investing. But in the end of the day, we have like 8,000 billion-dollar institutions or billion-dollar entities or people worth at least $1 billion. Like of them, maybe 2% or so are exposed. So we potentially have still 98% of them who have to be exposed. Then we have 40 million millionaires. We have basically 98.2% of the world's population not involved in Bitcoin. And where we usually have demand and supply, when the demand goes up, well, people produce more. So you have demand, supply, and the price regulating the whole mechanism. In this case, we have demand, a fixed supply, and the price. Well, when the demand increases, the supply can't increase. The price is the only regulating mechanism. And I really hope that the people understand that, especially, and that's where my next question comes into place, in times like this, where people are questioning, well, are we going into a bear market? The Bitcoin price is basically going sideways for a year. Wow. I mean, we are like for 12 years just going up with a few breaks. So now that is my next question, actually. And number one, do you think we are in a bear market right now? And number two, something I was interested in, there are a few different theories. You probably know the 4-year cycle theory. And there's also another theory about lengthening cycles. And even though you are, of course, a long-term investor, price will be to a certain degree in the short and midterm also interesting to you. So I really would like to know, do you think we are in a bear market right now? Do you actually think this is just the beginning of a much bigger run towards the upside in the mid-run, let's say? And what do you think about the 4-year cycle theory and the lengthening cycles?
Well, I think we're in a consolidating plateau, and I think it's a pretty good plateau, because there are all these conventional mainstream investors, and they've been watching Bitcoin. And when Bitcoin was going up too fast, when it was running parabolic, they're afraid to buy in. But right now, sitting in a plateau where they're a lot more likely to buy it, by the way, if the return looks similar to the NASDAQ, and the return was 5x the NASDAQ. We got some really great news this week. Saylor came out and he announced that half of his personal net worth, half of his personal portfolio is invested in Bitcoin. And he said the other half is like an Amazon. He's held Amazon for 25 years or whatever. And, Amazon is famously volatile. It went through lots and lots of 80% downs and a 90% drawdown. And he's just been sitting forever. He's like a classic hodler. And Amazon's big tech. In essence, what he said was, I own digital gold and I own a big tech retailer, and that's half and half. Now, he had a year ago, he said, I have some, but he never said 50%.
Yeah.
Now you've got all the other mainstream investors that have some gold exposure, you know, the Paul Tudor Jones and the Stanley Druckenmillers and the Ray Dalios and the, you know, fill in the blank. And they're all starting to wake up to this. And when they see Bill Miller, who's you know, runs multiple billions of dollars and is a billionaire in his own right, saying this is the only thing I can find that can go up by a factor of 10 to 50, that that also is a store of value asset, right? Then they start to pay attention. Now, if Bitcoin was trading at an all-time high and it was like on fire, they'd be afraid. But you kind of like the idea that Bitcoin is 40% off the all-time high and it's catching its breath, and you think maybe this is an entry point. And in fact, I've seen lots of high net worth individuals and family offices that they're just now starting to do an allocation to Bitcoin. Like maybe we should allocate 5% or we should allocate 2.5%, you know, and, you know, February they would have been, or March or April or May, they'd be afraid. And now you know, they're through a lot of the risks, you know, the China crackdown de-risked the situation. The consolidations de-risk the situation. Every single publicly traded miner, every miner that comes public de-risks the situation. All the political, the regulatory clarity is de-risking the situation. And so I don't think we're in a bear market. I think Bitcoin is, it's moving through this phase where it, you know, it moved from 4,000 to 40,000 with volatility, and it's going to move from 4,000 to 500,000. I mean, the next plateau is the gold plateau, right? To basically digital gold replaces gold and flips gold, and that's like a $500,000 number, I think. And then then after that, it's really just a property index or a monetary index, which should be 10x that. So, you know, what I see is a move from where we are to 500,000 over 3, 4, 5 years, and then a move over the following 3 to 5 years. You know, it could take 10 years, but a move in the next epic from the 500,000 to $5 million range, because ultimately people say, what is Bitcoin? Well, Bitcoin is the apex property of the human race. It's the only property you can truly own. So the question is, who wants it? Well, everybody in the world with weaker property. So what is weaker property? Well, how about like a second house in Africa? Like how about land in the middle of Africa or Asia or South America? How about a building? And fill in the blank. Would you rather own a building in Venezuela or Argentina? How about a ranch in Colombia? Like everywhere in the world where you have excess money and you want to invest in property, the problem with investing in a currency derivative is the currencies are collapsing, right? And they're collapsing at 10, 15% a year in the Western world, but they're collapsing at 40%, 50, 60% a year in the developing world. So bonds, they're weak property. Real estate is weak property because you've got a politician that can do, you know, they're going to tax it and they can take it away from you, and you can't move it if you need to leave, and you can only rent it to people in the country. So, and then equities are weak property because the CEO controls that equity. They control, it's a security. And if you own securities, the bank controls it. Like, let's say you own a security, you live in Zimbabwe. Well, the government of Zimbabwe can take it away from you. Try buying it at JP Morgan. They can take it away from you. The CEO can print more equity and they can take it away from you. A random government, you know, in Australia can put a fine on Google and they can take it away from you. A union can unionize, right? So if you're holding if you're holding securities, you've got lots of risk. If you're holding real estate, you've got lots of risk. If you're holding gold, well, the bankers can print more gold paper and the gold miners can mine more gold and try to move through an airport with $10 million of gold, or try to move through an airport with $10,000 of gold. Try to move through an airport with $1,000 of gold. I tried to move through an airport with a pen knife that Amazon sold me, and it was labeled as TSA friendly. I couldn't get a knife that's like a quarter-inch or half-inch blade through a metal detector in an airport. So your property is all weak, all of it. And so how much is weak? Hundreds of trillions of dollars of weak property. So ultimately, I think that there are 8 billion people on the planet, or there shortly will be 8 billion people on the planet, and they're all going to want some amount of digital property instead of like that second Airbnb or that investment property or that equity. I even, by the way, you know, I even did a little survey on Twitter where Cash App let you they let you decide whether or not you wanted to give someone the gift of a stock or the gift of Bitcoin or the gift of cash for Christmas. And I actually put in a survey. I said, what do you want to give away? You know, cash, stock, you know, equity, or Bitcoin. It's like, you know, 93% Bitcoin, 7% stock. Like that is to say, everybody intuitively understands that equity or securities are risky, and that Bitcoin is property. And so it's like a 20 to 1, 10 to 1 or 20 preference if they need to own something. And so I think,
Michael, your audience is over proportionally smart also. You have a big Bitcoin audience, but I agree that this will be representative probably for the population in a few years. Otherwise, I wouldn't be sitting here. I think it's impressive results for sure.
Yeah, you're right. You have to be educated. Among the educated, there is an overwhelming preference for property. And I mean, it doesn't take a rocket scientist to figure out that if I offered you $1 million of real estate property in Africa, or $1 million worth of stocks of African companies, or $1 million worth of gold in Africa, or $1 million worth of Bitcoin in Africa, which of those four would an educated person choose?
I would take Bitcoin because it leaves me all the options to reinvest, hold, sell, move, everything.
So that means that, you know, you and I, we have our work cut out for us for the next decade, because this is going to be a decade of education, right? I mean, because a lot of people don't understand digital property yet, and they don't understand, and that's the only reason they don't want it. If you were to go to, you know, most people in the world, and you say, you know, go to Lebanon or go to Turkey, and you say, well, you know, the Turkish lira is crashing, the Lebanese pound is crashing. What do you want? Well, there's a small group of people that will say, I'm going to stick with the local currency because I'm a patriot and because my political leader told me to invest everything in that. There's a large group of people that would say, I think I want to switch that to digital dollars. Like they know they want dollars. They know they want a dollar rather than, you know, local Lebanese pound. I mean, there's a larger group. I mean, maybe 20% are patriots, 50, 60, 70% are going to take the currency. And then the last 10, 20, 30%, they're going to take the Bitcoin because they know that Bitcoin is even stronger than the currency. But that's the dynamic that's spreading right now, except every single day, people are getting smarter. Information is spreading, right? You can't put the genie back in the bottle. And so when you look at, you know, what is my thesis for Bitcoin over the long term? My thesis is technology will advance. Everybody's smartphones are going to get more powerful. We're going to get to a world where eventually, you know, Google and Facebook and Apple, they're going to also support this digital property and digital currency. That's spread to billions of people. Twitter is going to spread. YouTube is going to spread. Knowledge is going to spread. And I suppose even 20 years from now, there will probably be some kind of ignorant, you know, patriots that are ideologues that'll say, I reject all new things and I'm going to just do whatever I'm told. but it's going to get to be an increasingly small
Yeah.
portion of the population. And by the way, they're
Peter
not
Schiff is going to be part
they're
of
going
that
to lose their
probably.
money, right? Like the point is they're going to lose their money. The money is going to move to the wise. And so the smarter part of the population is going to get richer. The wealth is going to transfer, and that's going to create a strong dynamic. So, you know, the Bitcoin path is clear. We're not in the concept of bear market only makes sense if you have a short enough time horizon. Like if you're a trader and your time horizon is 12 weeks, you can have a bear market. But if you have a 10-year time horizon, then you really have to ask yourself, what is the technology trend and what is the cultural trend? And the technology trend is clear. We're moving toward everybody on earth having a digital wallet that they can move digital assets around. That's clear. And cultural trend is people are globalizing. So again, like if you're sitting in the middle of the Serengeti and someone offers you the chance to buy $1 million worth of ranch land in a country where you don't trust the government, like it used to be you didn't have a choice. 20 years ago, you had to take the local currency and you had to own the local land. But 20 years from now, you can use a foreign currency. Like, I mean, the truth is just about everybody would switch to the dollar tomorrow if they could, and they would swap. No one's going to use the peso, the bolivar, the naira, the pound, whatever. They would all switch tomorrow if they had technology that was safe, if they could figure out how to do it. So we're globalizing. We're using language like English, like we're globalizing our language, we're globalizing our currency, we're globalizing our property. It's moving on digital rails. That creates an advantage for the early adopters. There's going to be volatility, but you know, like if you bought Amazon stock 10 years ago, you know, you could have bought it for $250 a share. People would have said you're stupid, you know. And if you were holding Amazon stock 20 years ago, it traded down 90%, right? Well, the world's second richest or richest man was stupid enough not to sell when it traded down 90%, right? That's the key. I mean, when Facebook came public, the stock traded down 60% or something, you know, it crashed, and Mark Zuckerberg didn't sell. And so, I mean, the real secret to success is you figure out the technology trend over a decade, over between 10 and 30 years. And then you just either make that asset or hold that asset.
Yep.
And you don't really obsess over short-term cycles because you outsmart yourself, right? You're like, you'll be that guy that, you know, you'll be convinced we're in a bear cycle, you'll sell. And then all of a sudden some piece of news will come out, the price will double and you'll never get back in. And it will, you know, it's like it'll run away from you. So I don't think anybody's smart enough to time the market.
Yeah, I really agree. Actually, usually what I do in life is I try to learn as much from mistakes from other people. So I asked a few OGs in the space when I joined later on within the last 2 years, what was your biggest mistake? What was your biggest regret? Or what would you do differently? And every single one of them said, buying high, selling low, other way around, buying altcoins, investing here, investing there, going back to US dollar. Eventually, everyone who is in this space for at least 5 years would have done the best by just buying and holding and just doing nothing. And I really hope that most of the people watching this here are going to understand that. If you don't want to believe me, just ask anyone who is in this space for more than 5 years, and he will probably agree with that. I just wanted to put a few things you said here together because I want to make sure that people are taking this away. First of all, we mentioned the price target of gold, which would, if you put it over into the market cap of gold over, which is like, I don't know, 9 trillion or something, over to Bitcoin or 10 trillion, then we would have a price of $500,000 per Bitcoin if it would be on par with gold. So you said this should happen within the next 3 to 6 years. So let's say best case 3 years, then another 3 to 6 years to 10 times that, right? If we are going from the store value into other regions. So you would say your best case scenario for a $5 million Bitcoin would be best case scenario, speculative, of course, would be 2028. Is that correct?
Yeah, I don't, that's the best case, but I don't think it'll go that fast. But I think over a decade is
Yeah.
reasonable.
Yeah, like you said,
Yeah.
like 6 to 10 years, right? Of course. And
Yeah.
once again, what is 10 years? If you can 100 times your money, people really forget about that. And in the end of the day, do you really want to make every day 10, 20 hours research what altcoin to invest in? Do you really want to buy high, sell low when you can have almost certainty for 100x, right? That is something the people have to ask themselves. So thank you very much for this outlook. That was definitely a very, very interesting one. That is actually already it for today. I would love to get maybe back to another interview, not in the next, not after 12 months, maybe in the next few months again. I hope I get a little bit more of your time. Of course, whatever you want to share here towards the end, I would love to have some last words for you to the audience.
You know, if I look at the course of my life and look at investment wisdom, I'm reminded of a few things. One, Warren Buffett said, if you wouldn't hold that thing for 10 years, you shouldn't hold it for 10 minutes. So if you start with this just Warren Buffett idea, find high quality property, high quality assets that you believe in. And if you're not sure you would hold it for 10 years, instead of investing in it, you probably should invest in learning more about it, right? Study something long enough, right? But Google, Facebook, Apple, Amazon, Microsoft, Bitcoin. Study something long enough that you believe in it. And then when you buy it with a 10-year idea and to be thinking, I'm going to just hold this investment. I'm going to hold this asset for a decade. By the way, the same is true with a house. If I bought a house, I wouldn't buy a house that I expected to sell in 3 years or 2 years. If you don't think you can live the rest of your life in that house, you could rent. I mean, when you buy a property, if you buy a piece of art, you know, buy something that you love, you know, that you're going to be committed to for a long period of time, because that's a higher test. And I think when people buy stuff and they're like, well, I know it's got bugs and I know there are problems, but I'm not going to keep it that long, right? What you've done is you've lowered your standards. When you buy your dream home and you say, I'm going to retire here and live here the rest of my life, you don't live in fear that you have to find some other sucker to sell it to, you know, because you don't have to sell it because you bought it, because you're committed to it. You're married to it. So I think that Buffett sets a good example there. He bought Coca-Cola stock 50 years ago or something. He still holds Coca-Cola stock. And I mean, when you raise the bar to that standard, it makes things a lot easier. What it says is you're going to be mature. You're going to make a decision. They're going to make an allocation. And then you're not going to stress out every day, every minute, every week, every month staring at the price. Like if you went every dinner party, if you went out and you got drunk and then you met everybody and you said, hey, I want to show you my house. How much will you give me for it right now? People would be, you know, you paid whatever, 500,000 euros for it. And someone's like, I'll give you 400,000 euros. You'd be so depressed. How much will you give me for it? I'll give you 600,000. You're ecstatic. And then, you know, 2 a.m. and you're really drunk. How much? And then you find someone who's even drunker than you. How much will you give me for it? 300,000. Now you're really depressed. Now I'm going to slit my wrist. It's because you're continually overindulging in this exercise. If you just said, this is my beautiful house, I love it, I'm going to live in it the rest of my life, you know, then it's a totally different situation. If I look at all the mistakes that I made, the mistakes are generally, just about every investment I ever made was a good one because I only bought good things. All my mistakes are, I wish I bought more. And my second mistake is I'm sad that I ever sold it for any reason.
You're not doing this mistake anymore. You're buying so many Bitcoin right now, Michael.
Once you figure out what you love, then you buy it. And then your question really is, well, if I'm going to sell it, what's better than what I'm already holding? And that's what I would ask anybody that's selling Bitcoin right now. That's what I was asking when it was 10,000 a coin. I said, who are these people selling this to me? Like, what could they possibly be buying with the money I'm giving them that's better than what I'm buying from them? And the same is true. You've got a network Bitcoin. It's pretty obvious that the world appreciates it. It's common property. It's acknowledged by everybody in the world as a dominant digital network. We know there's more inflation coming. We know that technology is advancing. We know that people like being able to put things on their smartphones.
Yeah.
So if you believe in technology, if you believe, if you believe in the future of assets, like the only reason you would ever sell a high quality piece of property is to buy something higher quality, right? Everyone that's successful in life, they don't get successful by trading rapidly in and out. I mean, Bill Gates, Steve Ballmer, Elon Musk, Mark Zuckerberg, Jeff Bezos, they're not trading in and out of their property, right? They're buying property, they're holding it for 30 years, right? And so I think that just figure out what you love. If you're not sure what you love, do more research. When you've done the research, Warren Buffett said one other thing. He said the ideal holding company is the ideal holding period is forever. Right? That's the way you should think. If you're a wise investor, buy something that you can give to your children's children.
Yeah.
And if you think that way, there's a higher hurdle. Right? Look, maybe you want to speculate, and maybe you want to gamble, and maybe you want to invest. Okay. Well, so take a portion of your assets that you invest for the long term, and you allocate that to the highest quality property you can find, which I think is Bitcoin, but you can decide. And the other portion is investment risk, and you're going to actually that Facebook might be Peloton this quarter, but that you're taking a risk. And then maybe some is venture capital, you invest in private companies. That's a 10x bigger risk. And then maybe some is speculation, and you gamble with it, and that's 100x greater risk. As long as there's those 4 buckets, the irrational, then okay, do that, but be rational about it. And if you really want to be successful, the really successful investors, they picked something, they committed to it, and they stayed with it, and they're unshakable in their conviction, because the world will generate 10,000 anxiety-inducing headlines over the course of the next 10 years. And every one of them will be calculated to get your attention by creating maximum anxiety. And there's only one mistake you can make, which is to sell. That's the one mistake. And then everybody in the universe is going to try to get you to sell, because if they don't create anxiety, right? Inflammation or enragement is engagement, right? If they don't create the anxiety, you won't read the story. It's clickbait. Sometimes people post stories about me on YouTube, and they say, Michael Saylor said he'll sell his Bitcoin when this happens. And I go, whoa. And then I want to click on it. I'm like, wait a minute, I am Michael Saylor, and I know I'm not selling my Bitcoin. They still got me to click on it. It's that good. The media is engaged in getting you to react. And there's only one mistake when you've made the right decision. When your life is set, you've got the perfect house and the perfect family and the perfect assets and the perfect property. The only mistake is get panicked out of your position. So don't panic.
Yeah, there's even a website counting all the panic headlines about Bitcoin, that Bitcoin is dead. It happened over and over again. They said it in 2012, 13, 14, 15. It's like happening over and over again. I think you brought a lot of very important and valuable life lessons to the table. Everyone, you can educate yourself for free. Andreas Antonopoulos videos free on the internet. A lot of nice interviews with Michael Saylor. You can just check on chain. Since 11 years, addresses increasing, entities increasing. I mean, it's insane. The hash rate increasing, like without any breaks. Like all the on-chain data is all pointing towards the same direction. The price is down 40% from the all-time high. Perfect. Fundamentals are higher right now. The price is down. If you go to a shop, you want to buy a pair of shoes, it's expensive. You go back the next day, it's at a 40% discount. The shoe is the exact same. Are you going to say, oh, I'm not going to buy it, it's 40% cheaper? It doesn't make any sense, guys. Honestly, like, just make your own research, invest at your own risk. Once you did that and you like Bitcoin, buy Bitcoin, hold it, don't do anything else. So with that being said, thank you very much for that. I just had one question in the back of my mind I forgot to ask you. I think I know the answer already, but for all the people watching right now, I know there are a lot of Ethereum fanatics out there. I myself having 15% in Ethereum, almost everything else is in Bitcoin, of course, besides my own project. But like, if you exclude that, I have 80% in Bitcoin. So I wanted to know from you, um, are you holding any Ethereum, like even a dollar? And if not, would you consider in the future, at any time in the future, owning Ethereum?
100% of my crypto assets are Bitcoin. And the why is because it's universally acknowledged that Bitcoin is property. That is, it's a fair distribution, and it has none of the aspects of a security, right? Satoshi disappeared. The coins never moved for a year. They traded without a price. It was a project, and it was a project without any characteristics of investment contract. So if you look at the entire crypto ecosystem, all the uncertainty, all the regulatory uncertainty and the question marks are around securities, right? Stable coins are securities, lots of tokens are securities. If there's an ICO, if there's a central organization, if there's a pre-mine, if there's any kind of, if there's a foundation that has treasury, if there are executive decisions, if there are lots of hard forks that are happening every quarter, every 6 months, that starts to look more like a security in the eyes of a regulator. And I'm not your lawyer, so I'm not here to give you legal opinions one way or the other. But what I would say is, I am 100% certain that Bitcoin is property, and that means it's common property to the world. And I don't know the status of everything else. If something is property, it means that it is ethical and it is legal for a mayor, a governor, a senator, a congressman, a public official to promote it. Like, Chris, if you were to ask me right now, do you have a price prediction for MicroStrategy stock? I would say no. That's a security. I'm not going to give you an opinion about a security. If you were to ask me for an opinion about any company, Facebook, Amazon, Apple, I would say that's a security. I would have civil liability, right? It's governed by the SEC. I don't wish to opine on it one way or the other, right? If you were to ask me about Bitcoin, I will look you in the face and say, Bitcoin is going up forever. It's good. Everybody should own it. So you understand, there's a safe harbor and there's a clarity around Bitcoin because it is property. When other things reach that degree of clarity, if there were other cryptos that were universally acknowledged as property, then they're something you could consider investing in. I don't have a problem holding property. I would hold land. I would, I don't have a problem promoting. I think you should buy your beach house. I think you should buy your second home. I don't have a problem with that. But I'll never give you any investment advice about a security, a private company, a public company, a crypto token, because that crosses this boundary, and I don't know. Like I think you got to know your limitations. And so I'm hyper conservative in that regard as a public company officer. And because I've been a publicly traded company for 22 years, and I'm everything I do, like if you go and you look at our quarterly results, read them, or read my 10K, it has like pages and pages of risk factors in it. Full disclosure, when you have a security, you have an ethical obligation to give comprehensive disclosure about everything you've done, everything you're thinking about doing, and even then you worry, right? And so I like Bitcoin because it's property, and you don't have that issue. I'm not ready, and it's just not appropriate to go into the other crypto areas, because we're going to have 3 to 5 years of regulatory clarity whereby during that time period, 30 jurisdictions are going to be working through how they feel about every single token. And I don't know, you can make money, no doubt. But I classify it as it's like technology venture capital. It's either an investment, like if you said it's guaranteed, it's just as safe as Apple, then it's an investment. But I wouldn't recommend Apple stock, even though it is an investment, even though it's publicly traded an investment. Or it's like in this private zone where it's like VC, like venture capital. It's much riskier and there's a much greater failure rate. I mean, the odds are not 95% likely that Apple goes out of business in a decade. The odds are 95% likely that private companies go out of business in a decade or more. So no, I wouldn't do that. Or it's a speculation. Like you asked me about SHIB versus Doge voices versus another dog coin. It's like you can make lots of money if you did, great, good for you. But it's like, I'm not going to recommend which football team you bet on for the Super Bowl. I just don't know. That's not what I'm here for. And I couldn't in good conscience make a decent recommendation I'd stand by.
Yeah, no, I understand. And I think history so far, even if it was only like a history of 15 months or whatever, it proved you right already. And I think we just talked about a potential 100x for Bitcoin. Who is asking for even more than that? If this is now almost a certainty, maybe that's something we can say. Who wants a 200x or 300x with like so much more risk involved? If you lose a 50%, you have to make 100% to get it back. If you lose 80%, you have to make 5x your money to make it back. So just go with risk minimalization, and I think Bitcoin should be the best deal. That's why I'm also exposed 80% in it, actually of my net worth, so to speak. Anyways, thank you very much. That was insightful. Awesome interview. Unfortunately, not in my usual setup. I'm traveling myself, but I truly appreciate the time you put in. Actually, what the people don't know who are watching this, I already let you down on the 23rd of December because I was so busy. Thank you so much for your understanding, for coming back, and I hopefully see you very soon at the next one.
Yeah, thanks for having me. I always enjoy our conversations.
Perfect. Thank you. And everyone watching, like, follow Michael, share the video, do something good and spread the word. Thank you. Bye-bye.